Happy Wednesday, Wealth Press viewers. I'm here with the midweek update with Lance Ippolito. Lance, welcome.
Hello, James. Good to be here.
You bet. Lance, we started the week off with a flurry of option long activity, short-dated longs, as a result of, China giving a government boost to their stocks, but also the Dow kicked off the week with a bit of a run. What is happening now midweek? Has that sort of little mini bull market sustained itself?
So you would think with the sell-off yesterday, we'd see some put protection or people buying puts on the downside as the market sold off, but no, not at all. We had a low volume sell-off, which was key. We didn't sell off on volume, so therefore low volume sell-offs are usually nothing to be too scared of. Although I will make note that the put call ratio, we are seeing some of the lowest levels. So usually when we have where no one wants to load up on puts, the market will usually do the opposite. So we still saw call buying though, and these China stocks, especially that TME Tencent Music Group that we spoke about. The stock rallied about another 5% yesterday. So traders continue to roll calls up, meaning they're taking profits on some calls that are in the money now that they've made money in the past, and then they're taking those profits and then buying a higher out the money strike price, looking for more upside. We saw that in names like Baba, Tencent Music Group, JD.com, and even Baidu for the China exposure.
Mm-hmm. So then last time China gave a boost verbally to its stock market, it all ended in tears. That doesn't seem to be happening at this point.
James, everyone will dance and party until the music stops. And I don't have a crystal ball. We can look back at history, as you mentioned in 2015, with the music and the party was going on, and then it came crashing down. So the DJ's still playing right now. When will he stop? I don't know. Maybe it will end better this time. Maybe it will end worse. But all we can do is take it day by day, and of course, use history to learn and always have that in back of our minds.
Sure. The rhetoric out of the U.S. government against China and sort of positioning China as the biggest threat to America, most recently by the FBI director. Do you see this whole sort of saber rattling going on as potentially being perceived as increasing the risk of actual armed conflict between the U.S. and China, possibly in the South China Sea?
If you asked me this question 6 months ago, or if you asked this question post-election, then I think we could see some kind of escalation. But I think going into the election, I really think that here at the U.S. and the political system here, I think we really just want to keep China at ease and keep our, technically China trade war talks low key right now, just because we have so much going on and we don't need another negative, or the president, I should say, doesn't want another negative press release going not his way, so to speak. I think eventually something has to be done, and we will see something. But I mean, we've had this, China trade war and news and talks of this for years now, it seems.
Mm-hmm. Yeah. To what extent do you think the Trump administration uses the pretext for both sort of military potential conflict as well as the trade as a way to attention from the controversy surrounding the president currently as it pertains to his response to coronavirus, his response to Black Lives Matter, and a general perception that he's losing ground even with his base?
Right. And there was an article, and I don't know if you read it, about China with, I think it was some of the pigs spreading another airborne disease or so that could make its way here in the U.S. I I think from an image point of view, the president has to be strict and stern with China. But I just don't see any war, combat, or too much of a negative press releases going back and forth going into the election. It just, it feels weird because you'll have the president come out and tweet stuff about the Kung Fu virus or China ruined the U.S. economy, but I'll keep it back. But there's been no real battle or no real conflict that's made its way at least into the financial market, so to speak. And of course, we could probably thank the Fed for that.
Yeah, CNBC is running. Yeah, CNBC is running a story this morning suggesting that the Chinese theft of U.S. technology through hacking has resulted in the largest wealth transfer in the history of the United States, which to me just seems to take everything up another level. First, they're sort of hegemonic minded with their expansion in the South China Sea. Then they're medical saboteurs because they've unleashed this virus. But now they're also the biggest thieves in perspective of the U.S. economy. And it just seems to me, like it's just another ratchet stepping up, another ratchet. And China is very sensitive to its perceived response.
Right.
It's got this obsession with the idea of losing face or saving face. And there is definitely a limit beyond which China will be forced to respond in a way that it can be perceived to save face from increasing insults from the U.S. president. And this is why, on the surface of it, it doesn't really look like serious moves towards war. Everybody knows Trump's a windbag, and that's just the way it is. But, he's really treading a fine line with the Chinese national character that I think is actually brought the prospect of a conflict, of an actually armed exchange at some point, and I'm sure it's going to be in the South China Sea, a lot closer to the timeline than people realize.
Well, we talk about China wanting to stay face in their image. It reflects back to us as well as, basically what the Chinese government said was, hey, let's get people to open up brokerage account, to get the stock market up, so therefore our economy looks good. And that's exactly kind of what we did here in the US. We just went to the Fed and say, hey, make our economy look good, prop up the stock market. So we're basically at, we do this with the Fed. Chinese government does this with their brokerage accounts. China stocks are at a 6-month high. NASDAQ here is at a new all-time high. So we're kind of like at a show, a ego point of view of, oh, look, we did this. Okay, we did this. And we're just going back and forth to prove, whose economy or how good both countries can look to others, so to speak.
Sure. To what extent do you think market participants are fooled by this display of, we'll juice the market and people will think the economy is strong? Do you think it's more a case where sophisticated traders, at least, have the perception that, thanks to the incredible manipulative influence of massive quantitative easing, both in the US and in China, that the performance of the market is unrelated completely to the general economy initially, but also even to the earnings of the market's constituents. The earnings are no longer a fundamental factor.
I think you had a lot of smart people who thought, hey, we have so much negative news in the economy and the economic numbers are so bad. And these people were really, really smart, a lot of hedge fund managers, and they missed out on, the NASDAQ now, I believe it's 22% up 22% year to date. So really, the dumb money, the people who think stocks only go up, crushed it and outperformed the hedge fund managers and the smart PhD economists because they, they saw all the negative news out there from a statistical point of view, and you can't deny that the markets have gone up so much. Now, I'm not saying energy or bank stocks and stuff like that have rallied and everything, but if you were just buying tech and you thought stocks only went up, you've caught a massive move, and you have a lot of smart money still saying the stock market's going to go lower, and then I'll buy it. Uh, the smart money says, and I mean, we haven't, and they've been hoping for months now. So
Right.
everyone can have this in back of their mind, and you can realize that, hey, eventually all this is going to catch up to us. But at the end of the day, timing is key, and trying to time where the market's going to go up or lower or down, I should say, to buy it at the perfect time when it's down. That's very hard to do. And very few people have done that. Instead, the folks who have said, okay, the market's starting to go up again, I'm going to buy it, they've gotten rewarded.
Mm-hmm. Right. Okay. So with all that in mind, what are the hot trades, hot sectors, hot asset classes you're chasing today?
Chasing, that's exactly how I feel when I'm buying stocks or call options, to be honest with you.
Because you respond largely to momentum, don't you?
Right. And it's very difficult buying stocks at all-time highs or near all-time highs. But if I said that 3 weeks ago, I would have made a lot of money. And I look at these charts, or I buy these stocks like C Limited, ticker symbol SC, and the stock is at an all-time high. And I think to myself, wow, I can't believe I'm buying call options on it, but every day it goes up. I and to the flip side, every day I think about buying banks and airliners. It crosses my mind literally every single day because they're still right on their lows while the whole market has bounced up so much. And I can't. I don't buy them. And that's been the smart decision. So I hate to say it, but you really have to play momentum, and the strong names, those are the ones you want to ride. And the weak names or the bottom fishing, quite frankly, you're not going to get rewarded for bottom fishing. You're not going to find this, financial stock that's been beat down and buy it and see a complete turnaround in financials. Momentum is in tech. Momentum is in strong names that continue to move higher. That's where you have to be. You don't have to ride the wave to the shore. You just want to ride the wave, get a little bit of a high and feel good, and then jump off it. You could always hop back on.
Yeah. Yeah. And then coronavirus, it doesn't seem to even be a factor in the market anymore.
We used to, weeks ago, get these headline news of Florida cases, Texas cases, Arizona cases, hospital numbers. Markets don't even care anymore. You could come out and say Florida's got 50,000 new cases today. The algos won't even move the S&Ps anymore. No one, market doesn't care.
Yeah. I guess we've just resigned ourselves to the fact that it's here, the fact that, yes, 3% of the population is going to take a most profound hit, but we're unwilling to modify our behavior to thwart that reality because we need to live and we need to make money. So especially where you are in Florida, you're seeing a lot of that mentality prevail among the population, I'm guessing.
Yeah, it just, it's a thing of it's becoming just okay. We deal with it. I think the president said, live with it and go about. It's crazy to see, especially if you look back a month ago when it was like, oh wow, this is such a drastic change, or this is so bad, but it's becoming a new world technically. And from a stock market perspective, you're seeing these new world or new era stocks, your Pelotons, your your Zooms, your Rokus, your work at home stocks, the video gamers and such. They're kind of the new flight to safety, so to speak, or they're like, the new darlings of the market.
Hmm. Okay, well, that sounds great, Lance. Let's leave it there for now. We'll come back to you on Monday for the roundtable again. Happy trading, and we'll see you soon.